Now is Jason Trennert, CEO of Strategas. Jason, it is great to see you today. I mean, you can start there. Where does your mind go on a day like this?
Well, listen, I think I start with first principles, right? And the first principles are, what is the health of the economy? And when I look at the things that we look at in that regard, whether it's credit spreads, which are very tight, whether it's the 10-year Treasury yield, which seems to be stable, whether it's earnings expectations, which look to be up something in the order of 12 to 13% for the first quarter and 14% for this year, it seems to me that I still want to be constructive on the overall market. What we don't know, of course, is how big a threat DeepSeek is to the Mag 7. To be honest with you, I'm somewhat skeptical, but I also know that I don't know.
I thought
there's plenty of other
a person
places.
like you, I thought, okay, you have how many years of experience in the market? You've often warned when people are just piling into these momentum and high valuation stocks. But is almost a 20% decline the kind of move that makes you think, well, for that, I could get into NVIDIA?
It does. I have to be quite, and of course you never pick the bottom precisely, but the moves, and particularly not just in AI, but another theme, a very close theme, is the industrial power theme, a Renaissance theme, which is utilities, a lot of electrical equipment, nuclear. Those have gotten absolutely taken out to the woodshed today. Those are also selling off in a big way, but I feel very strongly those are very both AI and the industrial power theme are very enduring themes that will provide investors with opportunities for many years to come. So when you have to recognize that if you're buying today or tomorrow, it could go down further. But the question is, does it look reasonable 6 months or a year from now or 2 years from now? And in my opinion, the answer is very likely yes. But again, we're going on not a lot of information, but that's my opinion.
Of course, but a 20% down move, as you said, whether it's the power names, some of that, you don't get opportunities like that a lot. The flip side is those who say that this is the dot-com moment where we thought we needed this massive build out for communications back in the 90s. Then all of a sudden, kind of the multiples start to slow and they shift. And then you think, well, all of a sudden, these stock valuations aren't justified. So is that the risk for anyone who's thinking about getting in now, that it turns out there was, X trillion of market cap for a company, okay, that's still going to do fine, but it's just not going to be as big as we thought it was?
Yeah, it's possible. I mean, these folks are, no one's perfect, but they're a lot of smart people here. Meta made an announcement last week that they're going to be spending $60 to $65 billion on artificial intelligence. And I also think there's a certain element of you get what you pay for. And so this idea that a new AI model that costs a fraction of the price that's coming out of a Chinese hedge fund is going to completely disrupt the AI universe right now seems, I'm somewhat skeptical of that. But, knowing that as we started the show, the thing about technology investing is that you're always subject to the fact that there's always a new widget, there's always new innovation that can wear away competitive advantages quickly. But I'm not sure this is the one, but again, I'm going to be keeping an open mind. If this is what it says it is, it's not great for Mag 7, you have to remember, but it would be great for humanity. I mean, if you were able to if you were able to get AI on the cheap that had the same quality, it would greatly speed up the productivity enhancements that we're hoping to get from AI in the future. Yeah. So there's a lot of moving parts here, but I'm still pretty constructive on both the economy and the markets. And
we do have Apple, Meta, those kinds of companies who would benefit from cheaper AI up today. Let me kind of pivot, Jason, while we have you and ask, because the clock is ticking. You know this administration as well as anyone. What are you telling clients to expect in terms of tariffs on Mexico and Canada? And why has the president been kind of quiet on China?
Listen, I think it's important. This is my interpretation. I'm hardly an intimate of the president. Okay, so but I've watched him and feel like I have a decent idea of the way he operates, and I think that he views tariffs as a tool. He views tariffs as a negotiating technique. It drives permanent Washington absolutely crazy because no one's done it that way before. But he's very willing to trade tariffs for non-economic items, whether that's fewer fentanyl shipments through the southern border or whether it's immigration. And again, that's not the way we've really done it since the end of World War II, but that's the way we're doing it now. And as an American, frankly, I love it. And I know other countries may not like it. I know if you work at the State Department, you might not like it. But I do think it's going to result in better outcomes for the United States. And I think there's a tendency, as Peter Thiel said, President Trump's detractors take him literally, but they don't take him seriously. The people that like him, they take him seriously. They don't always take him so literally. In my opinion, this is all part of a grand negotiation, and it just shows that the nature of international trade has changed. I know a lot of people are upset about that. I don't see it going back, though. Not only in the United States, but also outside the United States, where there is more of a focus on sovereignty as opposed to these big multilateral agreements.
Agreed. You hear it in France. You hear it in a lot of other countries in the West as well,
Absolutely.
Thinking about it. Jason, thanks. As always, appreciate it. Jason Trennert from Strategas joining us today.